Let's see. Baumol model. United Industries Limited projects that cash outlays of rupees 37,50,000 will occur uniformly throughout the coming year. This is for annual cash disbursement. United plans to meet its cash requirements by periodically selling marketable securities from its portfolio. The firm's marketable securities are invested to earn 12%, and the cost per transaction of converting securities to cash rupees 40. Using Baumol model, what is the optimum transaction size of cash? Number 2, what will be the company's average cash balance? Number 3, how many transfers per year will be required? Number 4, what will be the total annual cost of maintaining the cash balance? Let's see one by one. So now, first one, optimum cash balance. Baumol model. Right. Optimum cash balance is equal to root of 2 into annual transaction or annual cash disbursement into transaction cost per transaction by holding cost per rupee per annum. Here A is equivalent to rupees 37,50,000. Transaction cost per transaction is equivalent to rupees 40. Holding cost is equivalent to 12%, that is equal to 0.12. Substituting this here, so root of 2 into, so 37,50,000 into transaction cost per transaction rupees 40 by 0.12. Answer 50,000 rupees. So optimum cash balance according to Baumol model, we have to maintain 50,000. This is first question. Second one, what is average cash balance? Second question, what is average cash balance? Average cash balance is equivalent to 50,000 by 2. That is equivalent to rupees 25,000. C. How many transfers per year will be required? Number of transfers is equivalent to, so 37,50,000 annual disbursement by 50,000 is equivalent to 75. So number of transactions are 75 transactions required, or 75 transfers required. D. What is the total annual cost? So total annual cost is equivalent to transaction cost plus holding cost. So transaction cost is equal to 75 transactions per transaction cost rupees 40 plus holding cost. Holding cost is equivalent to, so EOQ 50,000 by 2. EOQ means here optimum order quantity, optimum cash. EOQ in middle variances, middle cost. Here it is called optimum cash. 50,000 by 2 into carrying cost per unit per annum, that is equivalent to 12%. So on adding this, you will be getting, this is 3,000, here this is also 3,000. So 3,000 plus 3,000, 6,000. So total annual cost 6,000. That's it. Subscribe to our YouTube channel Stride Edutech and press the bell icon to see new videos.